Hi, this lesson is on working with funds in the Uniform Accounting Network. So please open your UAN New Client Handbook to page 11, Chapter 2, second section on funds. Well, we have a more detailed definition of funds, and like we said before, a prerequisite is really having an understanding of fund accounting. But I'll read over our brief overview here to start off, though. Anyways, make sure we're on the same page. A fund is a reserve of money that has been designated for a specific purpose. Funds establish the legal level of control to maintain accountability for the related assets and liabilities of the entity. All receipts and expenditures entered into the UAN system are allocated to one or more funds through the use of revenue and appropriation account codes, respectively. So once you, in the normal operations, once you set up your funds, your sources of revenue, your receipts, and your payments and other expenditures that reduce your cash, those are going to reduce your fund balances respectively using your revenue and appropriation account codes. The first component you have to set up is your funds. And whoops, jumping ahead here, let me go to, you can see in the book on page 11 our menu path is under accounting maintenance. Now our last lesson was checking accounts, so we're assuming if we took a look at that checking account, we have a zero cash balance. So possibly you're watching these recordings and you're in a situation where you're just a new fiscal officer and you've already got a cash balance established. Well, this set of exercises so far assumes that we're starting off brand new, we're converting from a different type of software system or manual written books, and so we start off with a zero checking account balance, zero balance for everything actually, but we don't establish that cash balance here in the primary checking account. We would establish the balance as we set up our individual funds. So again, the menu path is accounting, maintenance, and then funds. And that opens up the funds area. Well, our entity doesn't have any active funds. In fact, I don't think there are any funds at all if you look under status. So we need to start by adding our funds. If I go back to our book, got a few highlights that I'll point out. New funds can be added only if they are approved funds in the UAN chart of accounts. The chart of accounts for each entity type can be found under the accounting appendices in Accounting and General Manual by clicking the Need Help button, or as I mentioned before, a number of other ways you can access that manual. So we'll take a look at the chart of accounts. And when you're doing your conversion, you're going to lay all of this out on a spreadsheet based on if you had an old, different system for funds. You're going to lay out your old fund names, the numbers, and the beginning cash balance as of that year. So we'll see that later when we get to the conversion steps. I just wanted to highlight that for you. Here in the second highlight, the total cash balance for each fund can only be established during the initial setup of the UAN system, and that's what we're assuming in this exercise. It must include all checking, investment, and secondary cash balance within the fund itself. So if you got 5 funds, your total checking is going to amount to a lot more than just maybe Fund A or like your general fund perhaps. Well, for those of you converting, this is an important point. Obviously, if you're not converting, you're not establishing your cash balances at all. They'll just carry over from one year to the next. When you close 2011, whatever you have, your cash balance on hand for a particular fund, when you start January 1st of the following year, say 2012, that's your beginning cash balance. For conversions, though, you need to establish your January 1st cash balance as of the conversion year. And you'll separate your total of all checking, investment, and secondary checking accounts into funds, and you'll establish that. Later, you'll separate, if you have any investments or secondary checking account, you'll transfer cash over to those secondary balances. So hopefully that'll become a little bit more clear once we get to the conversion steps. But let's start, if we look at our book again, I'll get back to some of these points. Well, as we know, exercise 1 and 2 assume the entity is in the process of converting UEN from a different accounting system. Fund numbers and cash balances will need to be established in that case. All right, so to do this, we've got instructions on our exercise. Click the Add button and enter these amounts. So we're going to walk through I'm going to walk through entering these, and I'm going to point out some distinctive, some unique aspects of some of these. But understand, this is like the total of all of these funds will equal your total checking. So if I add all this up, that should equal, as of January 1st, my cash balance for my total checking accounts and all of my investments. That's what we're doing at this point, but we're separating it out by fund. All right, so to add, I click on the Add button, and the Add buttons are always going to be in the left-hand corner for these areas when I'm adding something new to the UEN software. And then notice it brings up the Add Fund form, and then I start by selecting the fund number. Well, where do I get these fund numbers from? Well, these are all included in in our case, the Township Chart of Accounts. And remember, this is the uniform accounting network, so we all share the same chart of accounts. Those are on the UEN system. You may have possibly, if you did manual books, you may have been using the alphanumeric township chart of accounts, or village chart of accounts, or library chart of accounts. But it's possible you could have been using I'm sorry, not this is the numeric system. You could have been using the alphanumeric system as well, or some other system possibly. So all UEN customers must use the numeric chart of accounts established by the Auditor of State and Local Government Services. And a copy of that, well, you can find that on the Auditor of State's website. You can also find a copy in the UEN Accounting and General Manual. So I'm going to minimize this screen, this Add Fund screen, and we'll click on the Need Help button. That opens up our Accounting and General Manual to funds, because we're in the funds area. But I'm going to use the menu here to find the chart of accounts. Now, if you're not, by the way, here's a little extra feature. If you're in the middle of, you got this open, you not really sure where to find the chart of accounts, you could use this Adobe search feature. Click on the binoculars. I can search for chart of accounts. So far, that would find every place where the chart of accounts is mentioned. Well, that's quite a bit. But if I look at these different, here's accounting appendices, Township Chart of Accounts, and there we go. So that's one way to do it. I could get more specific, and I probably would have found the Township Chart of Accounts and their appendices. But just for example there. I can use this menu, so as the book mentions, it's under Accounting Appendices, and then here we've got all the different chart of accounts under the appendices. So Township, Village, and Library. So in our examples, we're using Township, and here we can have fund numbers, revenue codes, appropriation codes, object codes, and we'll get to that. So let's look at fund numbers first. So this is what UN is basing these fund. This is where the fund numbers are coming from. And you'll see that some of these fund names you cannot change. For instance, the general fund is always called the general fund. Motor vehicle license, gasoline tax, road and bridge. But other funds you'll see you can actually change. You can change the description if you want. And notice also here that some of these funds are expandable. In other words, you could have multiple fund numbers, multiple cemetery funds. Well, you might manage the properties of 2 different cemeteries, so you might have a 2041 and a 2042 for your cemetery. Or special levies, you could have a couple different special levies. So you can have this entire range. Theoretically, you could have this many fund numbers for special levies, this many separate funds. However, you can only have one general fund or one road and bridge fund. So you use this as your guide for establishing your funds. So we'll go back to our add fund form, and we're going to start in our example, exercise number 1, the general fund. I'll select general. It's fund number 1000. Notice, minimize this. So notice that it fills in the name. I can't change that name. Can't type over it. It's all covered. The only thing I can do here is establish the cash balance. And I can only do this because it's a brand new entity. So that's 95,000. Type that in. And notice this checkbox says receives own interest. And it's set to this, what we'll see is a revenue code. This is the interest account. 1,701 represents, 701 represents the interest account for townships. So we'll say this is what is going to happen is if you post an interest receipt, it'll post from an investment or a checking account, it'll post the interest back to the general fund. It'll increase the general fund's balance. So I'm going to save this. All right. And it gives you a little reminder. It's going to remind you every time whenever you establish that fund balance that the fund balance must include all checking, investment, and secondary balances for the fund. You want to save it? We're going to say yes. And then you can move on to the next fund with it before closing the form. Notice it gives you a saved 1000 general confirmation at the bottom of the screen. And we can see it in the background in our list. So then I move on to the next fund. Well, notice the general fund's not included. You can only have one general fund, so now I'm adding funds. It's not going to display on my list of funds to add. So next one's motor vehicle license tax. I'll select that. Our balance should be 20,000. And then I'll save it. Same message, so I'll click OK. I'll move on to fire special levy. So we'll skip down here to fire special levy, but I don't have anything labeled fire special levy. But I can see this is something 2191. Well, we have the special levy fund, 2191. We can see right here that this has an expandable fund. There's a range of fund numbers for this, 2191 through 2219. I could have that many special levy funds. So I'll select the special levy fund, and here I can rename this fund. So I'm just going to call it fire special levy, to be more specific. If I press the tab key, you notice it changes my combining report title. This would be for your annual financial reports. And still, this section below is grayed out for this type of fund. So apparently for the special levy funds and townships, you're required to post interest back to the general fund if you have an interest receipt. So when you post interest earned on a special levy fund that's invested, checking your investments, it's going to increase your cash balances in the general fund. That's what that means. And there's no choice to that. That's based on the chart of accounts, which we'll see in a little bit. So our special levy fund for the book is $30,000 total. I'll enter that and press save. Click OK. And then we'll move on to the next one on our list. Well, that's 2901 FEMA project. So we'll scroll down to 2901, or we can type in 29, and it narrows down the list to the 2901s. Again, an expandable fund, and it's called the Miscellaneous Special Revenue, and I'll rename this one to FEMA Project. Well, as of January 1st of the conversion year, there's no cash balance, so we're not going to include a cash balance there. And then there's something a little bit different about this. It's that the checkbox is not grayed out. You can fill in the receives own interest checkbox. So theoretically, for this special revenue type fund, this miscellaneous revenue fund, I could fill in this checkbox, and this fund could post interest back to itself. In other words, when you post an interest receipt, it could increase the cash balance of the fund itself if I fill in this checkbox, receives own interest. Or if I leave it clear, when I post interest from this fund, maybe investment from this fund, it'll increase the cash balance of the general fund instead. And that's what we're going to do for now, so we'll leave it unchecked, and then we'll save the FEMA fund. And the next, and so before we go on, where am I getting all this receives its own interest information? Well, we'll go back to our chart of accounts under the Help menu. And remember, I pointed out this little section, the back of the chart of accounts, the township treatment of interest revenue accounts. That's at the last page or two of each of your chart of accounts. It's in villages as well, village treatment of interest revenue. Now libraries, it doesn't apply, because libraries, you'll see, are a little bit different, but for villages and townships, this is relevant. So we'll go to the township treatment of interest revenue accounts, and here we can see this chart. The first column, it says interest earned by this fund number, so list the fund number. So when you're posting an interest receipt, again, we're jumping ahead, but we're in this section, so I'll explain it. When you post an interest receipt, this answers the question, where will the system, what fund will the system increase the cash balance? If I post a $10 interest receipt, what fund does that apply to? If I have an investment that's comprised of the general fund cash, I'm posting interest receipt, well, it's going to post interest back to the general fund. But here with the 2011, it's going to post interest back to the 2011 fund. But if you look at a few others here, for the road, this is Road and Bridge 2031, it's going to go post interest back to the general fund. So, and it's required to do so. So this tells you that the system posts income to this interest account, and thus the fund. In this column, the conditional interest account is blank for most of these going down. So this really is represents, basically you don't have a choice. You're driven by the chart of accounts. If you have one of these funds, you have to follow, the software forces you to follow the guidelines to post interest to the corresponding fund in the second column, except for what we call these conditional interest accounts. And so if I look at that fund, the 2901, I believe that was our FEMA fund, or my next fund, which is 4301. 4301. Permanent improvement. Well, in this one I have a choice for 4301. Let's take a look at that on our chart. That's an expandable fund. You can see right here, 4301. And by default, it posts interest back to the general fund, or it could post interest back to itself, back to the fund itself, and increase it. So that's what we call a conditional interest fund, and it's determined by the chart of accounts. So anytime you see this, you have a choice, and the setting for it is right here. you can always go back and change the setting. So back to our book. We're on the sewer replacement fund, and we need to establish a $300,000 checking account, or a cash balance, I should say, for that fund. And it says we want to fill in the checkbox for receives own interest. So if I go back, let's see. This is the should be named the sewer replacement fund. And our balance is $300,000. And then I want to fill in, so notice that this will change. This 1,701 will change to 4301,701. It's telling it should, when you post interest, it'll post back to the fund itself. Again, you can always come back and change this, and then we'll save this fund and move on to the next in our example, the UN bequest fund. So that's 4951, and that's a permanent fund. And it's called UN bequest, so we'll change that name, the name of it, to UN bequest. Someone donated money for the purpose of, we're going to say it's for a cemetery. So the fund balance for this is for the book is $5,300, and it's going to receive its own interest, so it won't go to the general fund, it'll go back to the fund itself. Then here we've got this. Notice this checkbox is filled in now, the non-expendable fund. Well, this might not apply to many of you, may or may not. These are only used for certain types of funds, either permanent funds or private purpose trust funds. And that again is driven by the chart of accounts. So to go down to our funds, let's see, we've got our permanent funds, and then private purpose trust funds is around here somewhere. Okay, so if you use one of these funds at your township, then for permanent funds, if we look back, flipping a little bit too much, sorry about all that. If we look back at our book, it says right here, certain fund types require additional information. Permanent funds require specification of a non-spendable balance. So this is a type of fund that is legally restricted to the extent that only the earnings can be used to support the government's program, and not the principal. That's what a permanent fund will do. So in other words, someone donates. In our example, someone donated $5,000, and then they said that maybe years ago, but that's accrued interest over many, many years. And so we have $300 that can be spent for other purposes. The $5,000 is restricted. It cannot be spent. That would be one example of a permanent fund, such as an example would be like, say, a cemetery bequest. And those are always, the non-expendable balance must always be specified. With a private purpose trust fund, these funds may be designated, may or may not be designated as non-expendable, depending on the legal requirements for that specific fund. And the non-expendable, if they are required to have a non-expendable balance, then you need to specify that in UAN. An example of this might be, private purpose might be a scholarship fund. So for those of you converting, if you're not sure, you want to go back of what the principal, the non-expendable versus the expendable balance, you kind of want to go back to your initial paperwork on these funds, see how they were established, and check the notes in the initial documentation to determine what should be expendable versus non-expendable. And then finally, we have agency funds. An agency fund is for townships and libraries, and villages have a distinct unclaimed money fund for this. But for townships and libraries, they may be designated as an unclaimed monies fund. So we flick back to a chart of accounts. We've got agency funds here, and that might be designated for township as unclaimed money. So if we look back at our software, when we're adding funds, you can see here are some of our optional things. The non-expendable fund, well, it's required for a permanent fund, so I'll have to key in a balance here. Now notice it's not a required field, but I should. So when I'm initially setting this up, if I make a mistake, I can come back here and make changes to it. I'm going to go ahead and initially just make a mistake here. I'll say it's $301, just for the sake of it, and save that. And then that was our last example. I'll expand on this a little bit. For a private purpose trust fund, if I select that, notice that the checkbox for receives its own, well, the checkbox for the non-expendable fund is not automatically filled in. So that's determined by the legal restrictions on your particular fund, your private purpose trust fund, if you have one. And so you would want to determine that. If you fill in the checkbox, saying that it does have a non-expendable balance, then you'll put in the amount there. And then again, agency funds. Here's your unclaimed. If this is an unclaimed money fund, you want to designate it as unclaimed money if you're a township or village. One other note about expandable funds. Remember we had miscellaneous capital projects, and we added one, 4901. If I click on that, no, we didn't add that one, I'm sorry. Well, we'll see. Let's see. We'll see example of this a little bit later with permanent funds, so let me skip that part. So I'm going to click, I don't want to save changes to this particular fund. Close that form. So now we can see a list of all of our funds. And note that if I could select all, or I'll select one fund. Let's say that UN Bequest Fund. If I select that fund, click on Edit, I can come back here and change that to what my exercise called for, which was $300, and save it. So what that will do, by the way, the non-expendable balances, it's a nice feature because, you know, if you're legally restricted so that for this fund you cannot spend the $5,000 out of this fund, you shouldn't deplete it below $5,000. The software will enforce that restriction. So when you go to make a payment, say as of this time your fund balance is $5,300, but you've got, I'm sorry, the non-expendable balance is $5,000, not $300. That's my error. So the non-expendable balance is $5,000. So that means if I try to write a check for, let's say, $301, the software will prevent me from posting that check and reducing my cash balance below $5,000. And that's a good thing because you don't want to violate those restrictions on that fund. Okay, and then if we go back to our highlights once again, think I've covered just about everything there. We note that if a fund cash balance is incorrect and that no cash transactions have been posted, then it can be corrected in the edit button. So if I make a mistake here, I entered in, it should have been 100,000 instead of 95, I could still fix that. But once I record a transaction of any type, this January 1st balance is sealed. Only way I can fix that is by recording what we call a fund balance adjustment. And that's in the back of the book. We'll talk about that later. But so be aware that you'll want to map this out when you're doing your conversion on your worksheet, and we'll get to that at a later date on how to prepare the worksheets. And if you make a mistake, you want to review the information. And let's talk about reviewing that information. The best way to review this is by printing a report. And in our book, we talk about the big 6 reports. I'm kind of jumping ahead here. But a good thing to do after you establish your cash balances is to print this report right here, the fund status. The funds added will show up on this report, and it will show the balance totals. So it's an excellent report to look at after you enter, when you're converting, establishing your cash balances, to see if you didn't make any key-in errors. That way you can correct it before any transactions are hit, long before any transactions are hit, and you can correct it the easy way under the edit button. Okay, another way to do that, to review it, is if you select all using the header checkbox. You'll select all, click on the edit button. Notice that these arrows at the bottom appear, and you can move through the 6 different funds here by clicking on the arrows. Make changes, save changes. No, I don't want. It'll give you a prompt if you look like I was going to make a change, but I don't want to, so select no. All right, you can see on this screen that we've got an activate or deactivate button. Well, we're going to expand on that when we get to appropriation accounts and talk about activating and deactivating. You'll see these buttons here under funds, under revenue accounts, and under appropriation accounts, and a number of other screens. And the long and short of it is that, well, we'll go to our highlights again. Says new funds added after initial conversion can be removed as long as they do not have cash balance activity in the current year and do not have revenue or appropriation accounts. I'll have to get back to that. There's actually a little bit, not quite, a little bit of a typo there. The second paragraph, funds that cannot be removed can be deactivating. And we mentioned activating and deactivating will be discussed in the appropriation maintenance section. So I want you to be aware of those buttons are there right now. This statement here, I do have to correct that in the book. You may want to write over that. There's a little bit of you can't correct the cash balances, but as far as removing the fund with this fund button, for those of you who are initially converting to UAN, the remove button will not work. And so what you'll want to do, if let's say you enter the fire special levy or this FEMA project fund, and then you find out, well, you know, we're not going to receive that FEMA money, I should have added that, you'll want to deactivate that fund. So again, we'll talk about that later. But initially, for those initially converting, the remove button will not work in this in the funds list. If you're a current UAN customer and say you add a new fund mid-year, maybe you find out you're getting FEMA money, you need to add a FEMA fund, and you add it, but then you want to remove that fund for whatever reason, you'll be able to remove it as long as there's no activity associated with that fund. You haven't added other revenue or appropriation accounts, or you haven't posted any budgets to that fund. then you can remove it at that point. If those converting, you would have to deactivate and then remove it in a subsequent year. So we'll get to that. So let's move on to the next exercise. Well, actually, exercise 2 was displaying and editing information, which your screencast showed you kind of how to do this, but I'll just point out while we're in funds here. So I showed you how to go in and make edits. We talked about briefly activate, deactivate, and remove. And then there's display. Well, display simply displays the information that you've entered in a read-only format, so there's no way that you can accidentally type over something. So you can just view the screens that way. And while I'm talking about funds, notice that I'm in the funds area, and under related screens, there's a shortcut to fund reports. If I click on that funds reports, it opens up the funds report area. There's several fund-related reports I can pick from, but here's one of my big 6 reports, the fund status. And we talked about that a little bit before. I can select my fund status, all my funds in my fund status with the header checkbox, and using display, I can display it on the screen or print it out. We won't go into detail of how to use these reports, but here we can see, we're just focusing on the fund balance for right now. Here's our total fund balance, and really this is a total for our checking, our investments, and all of our investments right now. If you look at the bottom here, it says available primary checking. Now it's possible, again, that you have secondary and checking accounts and investments. For those of you converting, you're going to separate that money out between those between those categories if you have them later on. But at this point, you've established your fund balance, and you want to check over the cash balances to make sure your data entry was correct. All right, so now let's take a look at exercise number 3. And to do that, we have to run a data file. If you look at our book, exercise number 3, quit the UN software and run the training restore file accounting maintenance. So that's what I'm going to do, and I'll explain while I'm doing that why I'm doing it. This is not something you repeat at home. This is for this classroom purposes only. And the reason I'm doing this is to get a different set of data. So now we're going to start from a different starting point here. What we're going to do, I'm going to open the program, so I'll use and log back in. We're starting from a different point, and we're going to assume that this data, entity from this data, type in my password, that we've already had, this was an existing township, and their cash balance is carried over from 2010. We're in 2011 now, so they carried over from 2010. So this is a little different situation. And we're going to go back to accounting, maintenance, and for exercise number 3, again, as it says, this exercise assumes the entity has already posted cash transactions, and there is therefore they are no longer able to establish fund cash balances. So we're going to go to accounting, maintenance, funds, and here we got a different set of funds. We'll use this throughout our exercises from now on. But notice we do still have the UN bequest fund, still set up the same way. I'm going to add another permanent fund. So that was a 4951, and it's expandable fund type. When I click on add, notice that I go down to 4900s. The first fund number is 4952. Well, it's expandable, so it's just going to advance the next number on my list. 4952, it's a permanent fund. And from our township story, we want to add the Hayes Bequest Fund. We got a donation. And this year, we want to make sure we add that Hayes Bequest Fund to our list of funds. So notice that there's no way I can enter a cash balance here. That's because transactions have already transpired. This actually carried over, funds carried over from previous year. So I would have to get money in this fund some other way. And that makes sense. If you're an existing entity, you've had cash transactions before, you have a brand new fund, well, you just don't establish the cash balance. You either get that through a receipt, you get some revenue, or you do a cash transfer from some other fund to this fund. So you don't just plug in a number for the beginning cash balance. You do it by way of means of transaction. All right, so let's fill in the rest. We want to say that this fund receives its own interest. So the interest will post back to the Hayes Bequest Fund when we post interest receipts. And then based on our Buckeye Township story, we do eventually want to set up a non-expendable balance. This is a permanent fund, so it requires one. But right now we don't have a cash balance, so I put in a balance here, let's say $1,000. I'm going to get an error message. We won't interpret that right now, but basically what it's saying is that I don't have any cash in this fund, so I can't establish a non-expendable balance. So we'll have to do that later after we receipt in our donation, which is, I believe it's a $10,000 donation. We'll set a non-expendable balance once we get those receipts in. So we'll leave this at 0 for now. And that would be a good example of setting it up as 0 and coming back later. So now we see we got our two permanent funds. And later on we'll come back to edit and establish that non-expendable balance. Again, that's only for two specific fund types, permanent funds and sometimes private purpose trust funds. All right, that's it for our fund maintenance chapter. Our next section is cost centers.